Okay, it all ties together because what is gold is the ultimate what? Form of money. It's the ultimate riskless asset. Everybody, this is Rob Kientz reporting with the Freedom Report, and we got an interesting video today. We're going to talk about gold revaluation, the Swiss tariffs, or just gold tariffs coming into the U.S. and potential repercussions of that. And is the White House now walking that back? Or are they going to expand the announcement of tariffs beyond the Swiss refineries? A lot in the news about that. And then we're going to talk a little bit about the trade in gold in terms of what we're seeing in terms of deliveries. This is something I talked about on other channels, so I'm going to bring it here and just kind of talk about where I feel deliveries are in gold and what that could be showing us. This will be a little bit of a shorter video this time as I'm traveling. I will talk a tad about my travels, but really I think I'm going to save that for a bigger video when I get home. I'm down here in Central and South America, just doing some work on some research for the most part, and just trying to understand how these markets work and just getting education in it. Really down here for Citizens for Sound Money as we kind of bring the message of sound money to the world. And obviously in Argentina, we've seen that President Milei and his cabinet and his staff have done a great job of bringing Argentina back. I don't know if you guys will remember, but back in the day, a couple of years ago, we had Fernando Aguirre on the channel, goes by Perfall. Many of you know him from his books, his YouTube channels, talking about being a refugee of the Argentinian peso crisis back in like the 2000, 2001 timeframe. And, moving out into another country. And it's interesting. I finally got down here to see Argentina, but I got down here after the government had kind of taken over and started to turn things around. And just walking around Argentina the last couple of days and speaking to the locals, just being friendly and eating at restaurants and talking to people, there seems to be a lot of, it's very upbeat. The other thing about Argentina, it's very European. It does have a Spanish culture, meaning more Spain than necessarily a little bit different than say Panama, Mexico, or Brazil, something like that. So it's just interesting that the differences in culture, but just a great trip. And I'll share some insights to that, when I do my next video. But we're going to roll right into the tariffs because that's sort of the conversation of the hour, and I wanted to get my thoughts out on video about that. Now, I did do a very quick live stream when I was in Panama about this, about 8 or 9 minutes, talking about it, and I went into sort of a complicated sort of explanation of what this could be. But I also said, we don't know the answers. And I think the jury is still out on what's going on with the situation, with the tariff situation. And we're going to talk about it by just going over what's in the news and going over some potential theories. But you have to understand that nothing's really settled yet. And I think there was a lot of blowback on the U.S. and Trump administration from announcing those. And so there are some clarifications coming. Let's dive right into it. So according to Bloomberg, gold hit by surprise U.S. tariffs, unleashing new turmoil. According to Bloomberg, a Trump administration ruling that gold bars will be subject to tariffs stunned traders who had assumed that they would be exempted, throwing bullion markets into turmoil. Futures in New York, which are backed by bars shipped from Switzerland and other key trading and refining hubs, surged overnight to a record. They later erased those gains after officials said Friday that the White House intends to issue an executive order to clarify what that person described as misinformation. So we know from this point that it wasn't exactly correct. And I'm going to show you the letter from Customs and Border Protection that kind of explains in general sense, but obviously something there wasn't correct. Okay. And does that mean they're going to remove the tariffs or expand them? We don't know. And that's really kind of where we sit right now. According to the Bloomberg article here on Yahoo Finance, quote, traders, analysts, and executives across the industry had understood the bars would be exempt from reciprocal tariffs enacted by President Donald Trump, such as a 39% levy on Swiss goods. But when a gold refiner in Switzerland asked about it, U.S. Customs and Border Protection clarified that 1 kilogram and 100-ounce gold bars are subject to the levies, according to a letter from the agency. I'll show you that letter here in a moment. The decision, if it remains in place, has sweeping implications for the flow of bullion around the world and potentially for the smooth functioning of the U.S. futures contract. Gold's role as a financial asset in global currency sets it apart from other commodities like copper that have been roiled by tariffs. And traders said on Friday that shipments were freezing up in response to the shock news. So already just announcing that there's going to be a tariff froze up a lot of the market and it threw it into turmoil. And right now everybody's like, well, what's going to go on? Is this because we want to rebuild, the gold trade in the US? I speculated that could be one reason. If you think about protectionism, what it does when you issue tariffs, if they're long-term, is it long-term? Again, not bully ball by Trump, just trying to get people to the table, or a short-term deal to rectify some sort of trade imbalance or do something. If it's long-term and they intend to put these in place, it's going to change the movement of goods around the world. It could be isolating the LBMA. If you think about it, the BRICS nations are forming their own gold bloc. Then you have the U.S. over here tariffing gold bars into the country. Well, doesn't that sever part of the relationship between the LBMA over in the UK and the COMEX in the United States? And what would happen? It's been speculated that potentially it could cause problems in the EMP trade, the ETFs, and the way that monies are sent back and forth for the metals and where they're stored over in the UK, most of them, and that it could cause a liquidity crisis. And so I think the potential repercussions of that, the reaction to the announcement of the tariffs, has caused the White House to say, wait, we need to circle the wagons on this and clarify things. And depending on where they go, are they going to expand those tariffs to non-Swiss refineries and blow it up around the world and make the issue bigger to where it really puts the USA on an island in terms of having access to gold and silver and potentially moving more of the trade out of the LBMA into other markets and potentially pushing people over to the BRICS? It could strengthen the BRICS claim on the pricing power and the physical trade in the worldwide global market. And what would that do to the LBMA in the London market, the oldest gold market? A lot of potential repercussions from this. So I think calmer heads need to get on this and examine what this is going to do. But I wanted to make you aware what's going on. Quote on the article: in the long run, the existence of U.S. tariffs on deliverable gold products raises the question on the role of future trades in the U.S., said Jonah Tevez, a strategist at UBS AG. Until there is clarity, we expect the gold market and precious metals market more generally to remain very nervous. The U.S. Customs Notice was first reported by the Financial Times. The decision extends a tumultuous year for gold, which has soared to unprecedented levels. The industry is still seeking answers to several questions. It's unclear if the U.S. will impose tariffs on 400-ounce bars that underpin trading in London. I don't think so, because there is a trade of 400-ounce bars exposure in COMEX. That product has never really taken off. It's really the 100-ounce kilo bars, things like that. 100-ounce of trades on COMEX and kilo bars and industrials that really sort of drive the gold action here in the United States. I'm not sure if the 400-ounce bar is really on that radar because it's not really a feature of the United States market. And that agreement between the LBMA and the COMEX to put that out as a futures contract position really has never taken off. It's never really been adopted. Anyway, here's the ruling from Customs and Border Protection. This is the letter to that refiner from Switzerland. And it says, quote, "Dear Mr. Podney, in your letter dated July 18, 2025, you requested a tariff classification ruling on behalf of your client, Manfra, Tordella and Brooks. The merchandise under consideration is two styles of gold bars designated as gold kilo bullion bar and 1 iron ounce bullion bar. Both types of bars are used primarily to back contracts on the commodity exchange, COMEX, here in the U.S., but are also sold to jewelers or industrial customers for manufacturing purposes. Both are, both the kilos and the 100 ounce. Kilo is not a huge trade on the gold. I don't even know it's involved in the COMEX. It's really the 100 ounce bars, the 400 ounce, which really doesn't move, and then there's like a mini gold futures, right? But the kilo is not going to be a big impact on COMEX. It's more for industrial trade and that type of thing. Much smaller bar that if you're a jeweler or a small manufacturer, you may order in kilos. If you're a big manufacturer, you're going to order the 100 ounce bars more than likely if you want to go through the COMEX to get it. Down here, in your ruling request, you suggest clarification of the gold kilo bullion bar and 100 ounce bar, harmonized tariff schedule as unwrought non-monetary gold bullion or doré. However, Chapter 71, additional U.S. Note 1A, states the pertinent part. The term unwrought does not cover rolled, forged, drawn, or extruded products, tubular products, or cast or sintered forms, which have been machined or processed otherwise than by simple trimming, scalping, or descaling. The applicable subheading for the gold kilo bullion bar and 100 ounce bullion bar will be, which provides for gold unwrought or in semi-manufactured forms or in powder form, rectangular and near rectangular. So they're just clarifying in what forms and all that good stuff. The tariffs and additional duties cited above are current as of this ruling's issuance. They're confirming that they are legitimate and current. Duty rates are provided for your convenience, are subject to change, so on, so forth. So you get the idea there. Now we have an article from CNBC saying, because all this turmoil, what's going on? The whole gold market was ablaze with this the last few days. Gold futures trade off highs as White House to issue clarification on bullion tariffs, according to CNBC. This was published Friday, about 2:35 p.m. Eastern time. And from the bulletins in the article, quote, the White House said that it will clarify misinformation about gold bars facing tariffs. U.S. Customs and Border Protection said earlier that gold bars are not excluded from tariffs or Swiss exports, according to the Swiss Precious Metals Association. Gold futures closed at a record, but have pulled back on White House statement. Gold prices fell from a record high Friday after the White House said it will clarify misinformation about the precious metals facing tariffs, according to the CNBC article. Quote, the White House intends to issue an executive order in the near future clarifying misinformation about the tariffing of gold bars and other specialty products, a White House official told CNBC. Gold futures fell from an all-time closing high of $34.91 on the White House statement. Precious metals was last seen trading at $34.63. About a $30 deal. Not really that big of a deal, but the longer term implications could potentially be huge in that it could sort of push people into a re-engineering of gold flows around the world and which exchanges may have the most pricing power versus least pricing power. Now, I've been talking about probably for 15 years about how I think that the gold market's going to become fragmented. Tariffs could be part of it. Confidence in the markets could be part of it. The fact that the BRICS are forming a bloc and sort of isolating the West. The tiff between the Dubai gold market and the LBMA a couple of years ago, which we saw play out on social media. All of these things have indicated that the world is probably moving to more of a regional pricing format, or there's going to be a rejiggering or recasting of how prices are determined, what not only will it play at the OTC and derivative levels, the paper levels, but it also will play around physical movement of bullion as well. Tariffs certainly being a part of that could cause movement of bullion to shift. And that's going to cause havoc with trade, but it's also going to cause havoc with pricing mechanisms. And it's going to cause some uncertainty in the global markets. And we're seeing that certainly. Further, it says the Swiss Precious Metals Association warned earlier Friday that U.S. tariffs may negatively impact the international flow of physical gold. We're particularly concerned about the implications of the tariffs for the gold industry and the physical exchange of gold with the U.S., a longstanding and historical partner for Switzerland, said Christoph Wild, president of the Swiss Precious Metals Association. President Donald Trump has imposed a 39% tariff on Swiss exports to the U.S. U.S. Customs and Border Protection clarified this week 1 kilogram of 100-ounce bars are not excluded from the tariffs. Switzerland is the largest refiner of gold in the world, but not the only one. Quote, it must be noted that this clarification does not apply exclusively to Switzerland, but to all 1 kilogram and 100-ounce gold cast bars imported to the USA, the Swiss Precious Metals Association said. So it may be that the White House wants to walk back the tariffs, or according to this article, there's an indication that it's not walking them back. It's actually a broader classification. Just because this letter came out and said to a Swiss group, a Swiss refiner, doesn't mean it's just Swiss. Again, we'll continue to follow this on the channel as we always do on the Freedom Report. But I wanted to provide as much clarification as I could and as much source documentation as I could so that you understand what's going on. And that may help you clear up some speculation and potential misinformation that's being put out over social media. I also have a really good note from billionaire Pierre Lassonde on King World News talking about crypto money and moving into gold. Now, I will tell you, I know a lot of crypto traders that play crypto and gold off each other. Crypto goes up, they pull some money out, they may leave it in their account, go trade again, they may cash to their bank, or they may go on gold trade and vice versa. So there is a group of people that do crypto and gold and they just swing trade back and forth, Or there's a group of crypto people that may tip up a profits in gold or vice versa. So that's certainly something that gets played. But here's an interesting quote from billionaire Pierre Lassonde on King World News. Quote, what's interesting is that one of the cryptocurrencies, Tether, bought 36% or 39% of a gold company. And the idea is that they want to back their currency. They're buying U.S. treasuries, but they already have tens of billions of dollars of U.S. treasuries. They've got some real estate and they've got some physical gold as well in that cryptocurrency. And this something that could be a game changer is if some of these cryptocurrencies decide that they want to get even more backing from gold by buying gold and gold stocks, gold equities, if you will, mining stocks, that type of thing. And when you look at the amount of money, frankly, it's a deluge of money. It's a tsunami of money that's floating in there that would have a big impact on gold and gold stocks, and particularly the top class gold stocks. Billionaire Pierre on shares with King World News. Listeners, thank you for that code, King World News. Now, moving on to the gold futures, we're going to do a real quick analysis. Again, a bit of a shorter video. We'll come back with more later as we get more on the situation. Right now, the short-term gold trading is not going to tell us a lot. It's just some volatility. Don't want anybody to get concerned about what's going on the last few days. That's why I'm not going to do a deep dive analysis on that. I'm just going to give the general picture. And when we know more about what's going on with these potential tariffs and what's going to happen to that gold trade, we'll come back and do an update and give you the skinny on that and give you the big picture on what's going on there. You see elevated volume. What does elevated volume usually mean in gold? Shorts, right? How many times have we looked at that over the last 10 years? But now the elevated volume was what? It was an increase and then a decrease. In other words, this volatility comes from the tariff announcement, but it's short term. It's got a couple of days and it's not a long-term deal. So nobody panic. My advice is just to look at what the news says before panicking. Okay. It's just the way it goes with these types of things. One thing I'll say is a lot of times the Trump administration will implement a tariff to get somebody to the table for something else unrelated, and then they remove it. And people are like, why did you do that? Well, Trump does. That's his administration's longstanding way of getting people to the table. So it could be that, or it could be there's another longer term reason why they want to tariff the gold. I don't know what it could be. It could be financial reasons. It could be U.S. trade reasons. It could be a bunch of reasons. But anyway, we're just going to continue to follow that. The interesting thing, if you look at the top line, this will always be of the last day, right? And you're going to see what's interesting in the last year and a half, as we've started to see an increase in block trades, exchange for physical, EFP, EFRs, exchange for risk, meaning you're exchanging not a physical, but an OTC. Okay, so exchange for physical is futures, US to London, OTC. Exchange for risk is backwards. It's from London, OTC, back to COMEX, and it's just an exchange of contracts. Then you got trade after settlements, and all of these things have blown up in the last year and a half. And my speculation on this has been, is one, the gold market has become so volatile that people want to negotiate trades at a set price in blocks outside the system and then bring them to the system rather than going into that volatile system. Think about it. If you had the ability to buy your favorite stock, we use Apple as an example, and you can negotiate a set price of the Apple stock regardless of what's going on in the market and buy a block of it at your set price, it's basically setting like a guaranteed limit order. You're not introducing yourself to the volatility of the market. And then you put it on the market, and the market clears the trade. So that's the interesting thing about the futures trade. You kind of have that option if you're one of the players. I'm sure there are rules around it, but that gives you an idea. So there are lots of ways to kind of reduce your exposure to a little bit of volatility and maybe make a deal and just kind of bring it to that market. Block trades are making a big block of trades, trade after settlements, like take the settlement price, negotiate it, put it on the market the next day. And again, reduce your risk. And the EFPs and EFRs are just ways for people either seeking gold, physical in another market. Maybe there are price differentials, which have been between London and the US, or just exchanging positions from one market to another to adjust your risk to a given market. And given what's going on in the London and US markets and the potential for these to kind of split, given the tariffs, the EFPs and EFRs, I think are going to accelerate to a point, and then they may collapse and not exist, depending on whether those markets continue to work together and what goes on. But in any case, prior to all this tariff stuff, we've seen an uptick in these sort of trades designed to trade outside market volatility or settle outside just the general volatility of the market, or to trade between the two main price setting markets right now in the world of the COMEX in the USA and the LBMA over in London. Fascinating stuff. Another thing I want to point out, since I haven't done this a long time, the dominant futures contract in the US is now December. If you look at open interest at close, 355-ish thousand contracts. You've seen 4,000 added. So people are moving into December. Why? It's a year-end trade. It's usually one of the biggest months of the year for that trade. To remind you, if you haven't seen me report this in a while, because I haven't, it's a futures trade. So you're looking at future prices, a little bit of gambling. It's papers. There's some physical involved, but it's usually less than 0.1% or even less. Really, it's what producers and merchants are taking a defensive or hedging position against where the price could go because they use the physical, but it's also banks, hedge funds, managed money, all that kind of stuff coming in and just playing the price differentials. Okay, it's just exposure. It's a trade. They don't necessarily want the physical. They just want to play it. It's like if you buy and sell Bitcoin or buy and sell stock. It's just big dudes doing this. But it does lead to price distortions at times, interestingly. Now, generally, traders will follow long-term trends like inflation. There's a really good chart I don't have here, but I'll show it next time, of gold trading to shadow stats, inflation, not CPI, but shadow stats. So the market does respond to real inflation, regardless of what's reported by the US government or any governments, because it sees the prices in the real world. And so you've seen gold really just follow that real inflation number. And so over time, the market does a fairly good job of pricing that. But in the short term, it's short-term manipulations and things like that, which can cause people to have headaches. So just be aware of that. Of course, the regular traders don't trade that market. It's for the big guys, but it's interesting just to kind of see what's going on there. Last piece I want to highlight in terms of the physicality of the market. Now, like I said, 99.99% of the trades on the COMEX are not physical. However, there has been an explosion of physical this year, dating back to January and going through this year. Just highlight the bottom line. Let's see if I can get this bottom line right there at the bottom, make it as big as I possibly can for you guys. This is the 5,000 COMEX silver futures. This is as of August 8th of 2025. That will be Friday's trading. Gold. I'm sorry, that's silver futures. Oh, Rob, go up to gold. I was looking at silver before I came on the program. We'll get the gold one. Palladium. Apologies. Silver has delivered some this year. I'm not doing a report on silver because we haven't had the explosion. There's the 100 gold futures. All right. Look at the numbers. Since January, the numbers have exploded. We actually had 68,000 contracts in April, 75,000 in February. Even on a lean month like March, 19,000. A lean month like January, 22,000. A lean month like July, 12,000. The physical deliveries on COMEX have been much higher this year than in an average year. And so definitely people do want the physical. They're not just on the markets for the derivatives and for the gambling part of the trade or the speculative part of the trade or even the hedging part of the trade. They're there as well to get the physical, and COMEX has sort of become a physical delivery market, even though that's not really the original intent. And I wonder if the protectionism surrounds how much gold is bleeding out of there. And you would think that it would just limit the gold coming in. But if it separates, by nature, separates the US and London markets, that could be one of the reasons that the US is addressing it. And if you go back to what people speculated with all of that gold coming over the US, that it may be the Fed's buying it to put in the sovereign wealth fund or to refill Fort Knox or whatever the case may be. It may be one wild step on a branch speculation, not saying this is fact, pure speculation, is that the U.S. got as much gold as they wanted, and now they want to separate from the East and from London. London having its own potential issues with shortages, in the East establishing more powerful markets to insulate the U.S. among itself because they've got enough. And then by putting tariffs on other refineries, whether it's 39% to the Swiss or whatever to these other markets, it would slow the amount of gold coming into the U.S., which may help goose up near production in the United States. Sure. Speculative, don't know, just something to potentially think about. Anyway, what I predicted, the regionalization of the gold markets, the regionalization of gold trade, following the regionalization of the currencies. We're going through a currency change, the cryptocurrencies, CBDCs, the end of the fiat era. Okay, it all ties together because what is gold? Is the ultimate form of money. It's the ultimate riskless asset. And so as the currency and trade wars go, so too will the gold war. So we have to look at it, I think, in that bigger context. What does this mean in terms of the gold market in relation to the currency and the trade markets, the geopolitical realignments and the changes going on in the world, and the potential for massive amounts of currency moving from the fiat age into the digital fiat age and currency revaluations. I know the U.S. has talked about revaluations of the gold, and they talked about using the gold and Bitcoin to support the treasury and all that. I reported on that before. So there's a much bigger picture going on here. And without getting into all the details, I think we need to step back and we need to look at that. We need to say, okay, what is the big picture? What could this mean? Why could they be doing it? And therefore, we would have an idea of what is really going on. So I think it's worthwhile to have that conversation, not to overreact to short-term things, but to really look at the long term and say, what does this mean, for you and me? And what does this mean for the gold trade? And not to panic, but take that short term view, but also take the longer term view and kind of put things in context. Understand a little bit about history and understand what's going on in other parts of the market, not just the gold market, the currency market, the trade market, geopolitical alignment, and all that stuff that's going on. And I think that's really, if we pay attention to all those things and kind of form a worldview about all this stuff, it may give us more insight as to why this stuff is happening, rather than just look at one piece of news, saying, oh, this is the end of this, or this is this. It's okay to speculate, but we speculate within the context of trying to understand what the real outcomes are going to be. And hopefully we have done that for you on the Freedom Channel in the past, and we'll continue to do that for you in the future. God bless everybody. Thanks for joining. Until next time, this is Rob Kientz with the Freedom Report.